you're watching Market Cafe on ET Now with me Shreyansi Singh and with me is Cheryl D'Souza, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Cheryl, let's take a look at the Wall Street and see what that was up to.
Well, that was up to a lot of things actually, Shreyansi, and I must say that you are well coordinated with the way how a US market shut shop in yesterday's trading session. A sharp knock actually coming in for the US market in yesterday's trading session. So if you look at the way how the Wall Street ended, you had Dow that fell 1.5%, you had S&P 500 that shed about 2%, NASDAQ saw a dip of about 3.3% in yesterday's trading session. You had the CBOE VIX, which is actually that measures the market's expectation of the stock market swing. So you had the volatility index that jumped about 33% to about 20.72 levels, which is the biggest daily percentage gain coming in for the CBOE VIX. And not just that, it actually hit the highest close since early August. So yes, the sentiment definitely not that great when we talk about the US market. So it slumped. This as it is actually one of the market's historically worst months. That is usually September month is not that great coming in for the market. So you had the S&P 500, NASDAQ as well as Dow recording their biggest daily percentage declines since early August. You also had the mega cap 7 companies, or Magnificent 7 as we all call it. They all actually saw a huge drop with Nvidia dropping nearly 10% in yesterday's trading session. It also shed a record $279 billion from its market capitalization, and that is the biggest ever single day decline in market value for any of the US companies. So like I mentioned, not a great day coming in for the US market. Nvidia falling 10%. You also had Alphabet that fell 3.6%. You had Apple that lost about 2.7%. Add to that list Microsoft 1.8% decline coming in for that particular counter as well. Now all eyes will definitely be on the non-farm payroll data for the month of August that is due later this week. You also have the Fed meeting that is later on September 17th and 18th. So all eyes on what Federal Reserve will do. No doubt we've got commentaries pointing that they will go ahead with a rate cut, but will that happen or no? Only time can tell. So yes, not great day coming in for the US markets with sharp cuts across the board.
Well, absolutely sharp cuts across the board when we take a look at the US markets, but when you take a look at oil as well, that's also the kind of picture that you're seeing for oil as well, because when I'm taking a look at WTI, there's losses of about 4.3% coming in for WTI, and that contract was around $70 per barrel as well. When you take a look at Brent as well, 4.8% cuts coming in for that one as well, and it was around $73 per barrel, and that is Brent that I'm talking about. Now this of course was the lowest close since December, erasing all gains for the year coming in for US crude oil futures as well. And this move largely was after a report that Libya's rival governments could reach a deal that would help restore oil output, and that is something that the market has been looking at very, very closely. Manufacturing in China, meanwhile, fell to a 6-month low as well in August. So that is the kind of picture that we saw emerging for crude as well. Lastly, let's take a quick look at gold. Gold prices are not doing all that much. Gold prices eased to their lowest in more than a week as well. But when we take a look at oil as well, we're taking a look at a very bleak picture coming in. In fact, crude prices have plunged further with a 5% drop overnight on the likelihood of OPEC Plus restoring production as well. But how does this impact various sectors? Somit is standing by with an explainer.
Well, if you look at Brent crude prices, they have fallen below the $75 per barrel mark. Now, this is the biggest intraday fall that we have seen since 1st May 2024. Yesterday, Brent crude dropped nearly 5.2% on an intraday basis, and crude prices are the lowest that we are seeing since December 2023. Now, what is more important is that Brent crude has been on a downward trend, and it has been declining for the third consecutive month. In the month of July, it was down around 6.5%. August, it fell around 2.4%, and in the first few days of September, it has already declined nearly 6.7%. So why are we seeing this kind of a decline when it comes to crude oil prices? Firstly, OPEC Plus is expected to increase its production in the coming weeks. They are due to add nearly 1.8 lakh barrels per day of crude production going forward, and this is their own plan that they had guided earlier, and this is to restore the production losses that they had seen earlier. Apart from that, on the demand side, if you look at China's economy continues to remain soft. Manufacturing data for the month of August was at a 6-month low, and China is the world's largest crude oil importer. So the demand supply dynamics is changing, and is now we are seeing more supply coming in, and the demand continues to remain weak. Now India definitely benefits because of this, because more than 80% of our crude requirement is imported, and companies that tend to benefit more from this, firstly, is the oil marketing companies, because the fall in crude oil prices definitely boost up their marketing margin. Currently, if you look at the gross marketing margin that oil marketing companies are earning on petrol and diesel, it stands at around 11.6 rupees and 9.1 rupees per litre, which means that they earn this much amount of money by selling every litre of petrol, and these both margins are at a multi-quarter high. And as per analysts, every 0.5 litre change in the fuel margin increases the EBITDA of Indian Oil Corporation, BPCL and HPCL anywhere between 7 to 11 odd %. Apart from this, it's the paint companies, aviation companies, lubricant manufacturers, tire and a host of chemical companies that tend to benefit. Also cement manufacturers benefit, because nearly 40 to 50% of that cost are either directly or indirectly related to crude oil prices. Obviously they'll benefit it with a lag, because the fall in crude oil prices will reflect in the raw material prices with a lag impact. Also, lower crude prices is negative for oil explorers like ONGC, Oil India, HOEC, because lower crude means lower realizations for them, and as per analyst, every $5 per barrel drop in the Brent crude prices reduces the EPS for ONGC and Oil India by around 7 to 12 odd %. So keep an eye out for all these companies in trade today.
Absolutely. Thank you so much for that, Somas, for putting into context what's exactly happening in the crude market and the companies that will be in focus on back of that. OMC is definitely to watch out for. And remember, right now, this morning, you have Brent crude that has actually hit the lowest level since December 2023. But there are a lot of action back home. But before that, let's take a look at what the Asian markets are doing at this point in time, because sharp cuts across the Asian markets as well, with the Nikkei plunging about over 3% as we speak right now. It almost plunged about 4% on an intraday trading basis. I'll also mark the Taiwan's TAIEX also, because that index fell in excess of about 5%, and this after what exactly Nvidia did in yesterday's trading session on the US markets in the US markets. So that's the reason why you have Taiwan index also slumping in trade. Apart from that, you have Kospi, Shanghai, Hang Seng, all of that indicating a very sharp cut. And also you have the GIFT Nifty that is implying that we will be in for a sharper cut this morning, Shreyansi.
Well, absolutely. And since you talked about the cues, when you take a look at global cues from the US, you do have the job openings data, as well as trade data and beach book as well, that will be in focus from the US. From the Eurozone, there's services PMI as well as PPI data, and from China there's kicks in services PMI data as well. Now in terms of other events, couple of events to keep on our radar. There's Rahul Gandhi, who will be addressing election rallies in JNK, as well as Adani Enterprises that will be launching 800 crore rupees NCD issue as well. So keep an eye on all of those cues as well in trade today.
All right, so those are the cues to watch out for, but let's talk about the headlines, global headlines at this point in time. The biggest cue this morning is the fact that what is responsible for the steep sell-off on the Wall Street, that is the US manufacturing data that has contracted in the month of August amidst a mild improvement seen in employment. The manufacturing PMI rose to 47.2 last month from 46.8 in July, which was the lowest reading since November. Remember, a reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.3% of the economy. August, remember, is the 5th straight month wherein the reading has remained below 50.
Alright, well, while that was for macro cues, equities also witnessed sharp sell-off coming in, headlined by AI darling Nvidia, like Cheryl mentioned earlier, that plunged nearly 10%. The sell-off has wiped out nearly $300 billion of the chip maker's market cap, pulling peer chip stocks down with it as well, the likes of Intel, Marvell, Broadcom, AMD as well as Qualcomm. Additionally, the US Department of Justice has also reportedly sent a subpoena to Nvidia as it deepens its probe into the AI heavyweights' antitrust practices as well. The antitrust watchdog had previously delivered questionnaires and has now sent legally binding requests to the company.
Meanwhile, Meanwhile, Goldman Sachs believes that the gold has the highest potential for near-term price hike due to its status as a preferred hedge against risk, while weak demand from China has led to a more selective, more constructive view on other commodities. The firm believes that imminent rate cut from the Federal Reserve are poised to bring Western capital back into the gold market, a component that was largely absent from the sharp gold rally that was seen in the last 2 years. Welcome back. You're watching Market Cafe on ET Now, and government plans to sell up to 6.78% of its stake in General Insurance Company of India through an offer for sale. My colleague Anurag Shah is here on the phone line, joining us right now to tell us exactly what this means. Anurag, good morning.
Government has decided offer for sale for their stake in General Insurance Corporation, that is GIC Reinsurance Company. So floor price for the OFS is set as 395 rupees per share, as it is at a 6% discount to the closing, which is at 420. So this will be the first reduction in GIC Re since its IPO was launched. Presently, government hold 85.78% stake in GIC Re, and now government will be doing a OFS of 6.78%. So this is the part of government broader strategy to gradually reduce the stake in PSU companies. We have seen that in LIC also, after 3.5% stake, government going ahead will reduce their stake by 1.5%, and the proceed through OFS will help government to achieve their divestment target also. So government is going to do OFS in GIC Re with a 6.78% stake will be set into OFS at the floor price of 395 rupees per share.
All right, thanks Anurag for all of those details coming in. Moving on, then Finance Ministry has also held review meetings with other ministries to review capex targets. In fact, my colleague Sumit Chaturvedi is also standing by on the phone line with more details on this. Sumit?
Series of review meetings have been held and have been scheduled with ministries, departments with significant capex outlays. There's a budget capex outlays. The meetings will be chaired by FM in coming days. First such meeting was held. First of all, let's begin with telecom, where a review meeting with the Ministry of Communications was held. During the meeting, details of capex plans for BharatNet program, 4G mobile projects using indigenous technology, network for spectrum and 4G saturation were discussed. Let's move on to highways and other ministries. Well, here, overall capex on national highways, targets for award, construction, attracting private capital through various measures, they all were discussed as well. FM in the meeting underlined the importance of setting quarterly targets and ensuring that they are achieved within a stipulated time frame. Let's talk about the estimated capex budgetary allocation. For Minister of Communication, it's around 28,800 crore rupees. Overall, if we talk about this is clearly another important step to bring discipline and more efficiency into ministries' meetings.
All right, moving on, addressing the growing credit deposit gap, the DEA secretary, who is Ajay Seth, said that the deposit growth has to maintain pace for lending to remain at desirable levels. What else did he say? Listen in.
Deposits have to keep pace, meaning that for lendings to remain at the desirable level, deposits have to come in. But as I mentioned it, that this is not a concern that investors choose or the depositors choose a particular way. It is their choice. Different segments of the service providers have to compete on their efficiency and their price point.
All right, well, that's a word coming in from the DEA secretary. Let's move on then. And the Defence Ministry has approved acquisitions worth 1.4 lakh crore in order to strengthen India's defence prowess as well. The approved acquisitions include procurement of future-ready combat vehicles and Dornier 228 aircraft. Prakash Priyadarshi is standing by with more details. Prakash?
Yes, Defence Acquisition Council has held an important meeting today under the chairmanship of Defense Minister, where as many as 10 capital acquisition proposals have been accepted worth rupees 1.45 lakh crore. A very significant development coming in. But the most important part is that the DSE has accorded acceptance of necessity for 10 capital acquisition proposals. These are the most significant aspect of these proposals, where 99% of these procurement will be done from indigenous sources. Very important development coming in. Defense Ministry has come out with the details of these proposals, which has been accepted by Defense Acquisition Council. That include procurement of future ready combat vehicles, which is called FRCV. The FRCV will be futuristic main battle tank that will replace Russian T-92 tank and provide much needed capabilities to the Indian Army, especially at high altitude. Along with that, the proposals to acquire air defense fire control radars has also been accepted by DSE. When it comes to forward repair team, this proposal has also been accepted, where the equipment is designed and developed by AVNL. In addition to that, the DSE has also accepted the proposal to enhance the capabilities of the Indian Coast Guard, where Dornier 228 aircraft will be procured.
And days after a massive row broke out over Netflix series IC814, Netflix India content head Monica Shergill has been summoned by INB Ministry to give a clarification. This comes after the 6-episode series came under heavy criticism both from social media users and BJP for alleged false portrayal of the characters. My colleague Aishwarya Patil is here with all the details.
OTT platform Netflix has been in the midst of a row over the depiction of hijackers in their web series that is currently streaming, IC814, the Kandahar hijack. Now, this particular web series has led to the INB Ministry, Information and Broadcast Ministry, summoning the content chief of Netflix India. She was also accompanied with the legal team at this particular discussion and was asked to explain the contentious aspects of this series. As far as the word coming in from Netflix currently is, and I quote, "For the benefit of audiences unfamiliar with the 1999 hijacking of the Indian Airlines Flight 814, the opening disclaimer has now been updated, which includes the real names as well as the code names of the hijackers. And additionally, they've also said that the code names in the series reflect those used during the actual events. They also say they're committed to showcasing these stories and their authentic representation, also respecting the culture as well as sentiments of people and the viewers of this nation," is the word coming in from their content chief Monica Shergill. Apart from that, earlier on, as we had mentioned, government had said that nobody has the right to play with the sentiments of the people of this nation, and therefore portraying something in a wrong manner would not be acceptable, and they're taking this very seriously. They've also asked Netflix to review the content going forward as well on the platform. As far as this whole row is concerned, a little bit of context there. The row was over depiction of hijackers in the series IC814, the Kandahar hijack on Netflix. And earlier on, as I mentioned earlier, Monica Shergill along with the legal team had met the INB Ministry, was asked to explain the contentious aspects, and also a whole lot of criticism was attracted as a lot of people thought that this series dramatizes the hijacking of this Indian airline and the hijack that happened in 1999. Apart from that, Delhi High Court, there has been a PIL filed for banning this particular web series on the OTT platform as well. We'll keep you updated on more and what other turnout of events going forward.
Well, absolutely. Thanks, Aishwarya, for that update coming in. So the head of content at Netflix India has issued a statement. They've updated the disclosure as well as the Information and Broadcasting Ministry, saying that they're taking this very seriously. Let's move on then. IIT Bombay placement report for 2023 to 24 is out, and the report reveals a decline in the number of students placed to 75% from 82% last year. What are some other key highlights of the report? Then my colleague Astha Chopra is standing by with those key takeaways. Astha?
Well, IIT Bombay's placement and internship report is out, and it says only 75% of the student got placed this year. That means 23 to 24. Also versus last year, which is 22 to 23, about 82% students got placed. But this year, it's only 75%. So this means 25% of students got graduated, but without the placements. But the silver lining to the story is the average salary package have improved by 8% versus last year's. Also, the number of companies who came under the placement process also increased by 12% versus last year. But out of 1,797 students, only 1,475 students got placed. But it held a record for the second highest tally in as ever of June 30th. Also, out of 543 companies which were registered for the placement process, 364 companies made the offers versus 324 last year. The average annual CTC of the students were 23.5 LPA, and the lowest touching tally was 4 lakhs per annum. Also, the top recruitments sector among the students were engineering and technology, which was followed by IT and software. So the top sector which tops the list in the recruitment sector was technology and engineering. It was followed by IT and software. Other sectors also saw the participation. The other sectors which were in the list of top 5 are IT, research and development, finance, banking, and core engineering as well. And the interesting thing is the tally included 78 offers which were international. So the tally included 78 international offers, and about 22 offers were more than 1 crore LPA. So this was the Bombay's placement and internship report, which says sadly only 75% student got placed. But yeah, the annual package was much better this time.
All right, on that note, we slip into a break on this edition of Market Cafe. When we come back, we'll talk about stocks that are making headlines today.
Much for staying tuned in. Well, let's get you some more news and updates, and we have my colleague Ansh who's standing by with the futures and options roundup. Then Ansh.
Right, so let's start with what FIs did in the previous session. In the previous session, we saw that FI have added around 6,300 long contracts, but at the same time, they have added some shorts as well by around 1,100 contracts. But net to net, if you'll see, then we are seeing an addition of around 5,200 contracts, due to which the total long position has inched slightly up from 70% to 70.1%. Actually, this FI total long position has been hovering around that 70% from last 4 to 5 sessions, indicating they might have taken a pause in the market on the long side. Whereas if we talk about Nifty, then Nifty has been hovering around that 25,300 mark from last 2 sessions. In the previous session, it closed flat after advancing for 13 consecutive sessions. So even Nifty seems to be exhausted a bit and taking a break around this level. Whereas on option front, we are seeing put writing happening at the same 25,300 mark, indicating option traders are expecting Nifty to go above this level. Whereas if we talk about Nifty Bank, then as per chart, it seems to be positive because it has been taking strong support at that breakout level, and it has been hovering around that only from last 3 consecutive sessions. And if we talk about weekly option expiry, then today we have expiry, so we may see some good volatility and action in the market in banking stocks. Also, we are seeing some call buying happening at that psychological level of 52,000, indicating option traders expecting Nifty Bank to go above that level and sustain there. Lastly, let's have a quick view on few F&O stocks, and we are seeing significant long build-up happening in JK Cement, Oracle Financial and SBI Life, where short build-up happening in Trent, Marico and Bajaj Finance. So keep an eye on the stocks.
All right, thank you so much for that, Ansh. But let's head across to Ria, who's standing by to tell us all the stocks that are making headlines today. And Ria, which are the stocks that one should watch out for today? Good morning.
Yes, good morning. So there are a lot of stocks in focus today. First up is Texmaco Rail and Engineering, which has completed the acquisition of Jindal Rail Infrastructure Limited for a final consideration of rupees 614 crores. Now they are going to expand their wagon market present capabilities and product offerings through this acquisition. Now Texmaco's technical expertise is set to enhance JRIL's wagon production with minimal capex, and is also going to unlock major cost savings through bulk material purchases for both the companies. They are also going to achieve enhanced enhanced EBITDA margins on a consolidated basis, driven by increased private sector freight car orders. Let's also talk about GIC RE though, for which the government has proposed to sell up to 6.78% stake for an OFS floor price at rupees 395, which is a 6.2% discount to the current market price of rupees 241. Now the OFS is going to open for non-retail investors on the 4th of September and on the 5th of September for retail investors. We also have AU Small Finance Bank. The bank has submitted an application to the RBI to seek an approval for a voluntary transition from a small finance bank to a universal bank yesterday. Let's also talk about Torrent Power though. They have signed an MOU with the Department of Water Resources, the government of Maharashtra, to establish pumped storage plants with a total capacity of 5,600 megawatts. Lastly, we have Havells, which is in focus because the company has now started commercial production of cables at the Karnataka facility. Now the company has decided to further expand its cable manufacturing capacity in the same facility from the existing 3.48 lakh kilometers per annum to 4.63 lakh kilometers per annum, with an additional investment of rupees 450 crores. Now the production through expansion at this plant is expected to commence by September of 2026, and the entire investment will be funded through internal accrual. So we are definitely keeping an eye out on these stocks today.
Absolutely, thanks Riya. So there you have it. That's the list of stocks that you should keep on your radar bright and early this morning on account of news flow. We also have Gaurav who's waiting by to tell us which are the counters that make it to brokerage radar this morning.
Well, yes. First, let's begin with Bajaj Finance, because Macquarie has now maintained its underperform rating and a target price of 6,300 on this counter. And the reason being that the recent listing and the possible listing of Bajaj Housing Finance. Now, what Macquarie says is that the valuation is at 2.6 times price to book value if we consider the higher price of Bajaj Housing Finance. And on back of this, if we talk about the other players, we may see some upgrade in the other housing finance players. But at the same time, when we consider a premium, market premium, which would be somewhere around 50% the higher price band of Bajaj Housing Finance, it would still give another 5% implied upside for Bajaj Finance, and that is why they have maintained their underperform rating at a target price of 6,300 because of the limited upside that is there for Bajaj Finance. Next, let's talk about GSPL, because Morgan Stanley has upgraded the rating to equal weight, and they have also hiked the target price to 452 rupees versus what it was at 298 rupees earlier. What they have done is that they have now removed the holdco discount for the company. Now this move is coming because of the rating and the price target, which is in line with the Gujarat Gas, which because of the restructuring which is expected to happen in August 2025. And other than that, what they have done is that they have also lowered their EPS estimates almost by 48 to 59% to factor in the PNG prices change that has happened in the earlier this year. Lastly, let's also watch out for some of the chemical players. So Morgan Stanley has upgraded the target price for players like Deepak Nitrite and PI Industries, while they have downgraded the rating to underweight and also cut the target price to 568 rupees for Aarti Industries. What they believe is that monetization still remains a play for these players. There will be lower margins in the coming quarters as well. Other than that, they also believe that earnings are not fully de-risked for the company, and in this environment they would prefer commodity chemical players with the triggers which are less levered with the industry rebound, and that is why they have hiked the target price for a few counters. So definitely watching out on all these counters on the back of the brokerage note that we have received today.
So much for that, Gaurav. Moving on, getting your market voice, Mahesh Nandurkar of Jefferies shares a list of sectors that he is bullish on and also themes where he advises to exercise caution. Listen in.
The auto side, we clearly believe that two-wheelers, as a sector is looking like the best sector to own here. If you just look at the industry volume numbers, the current year FY25 industry volumes for two-wheelers are more or less in line with where we were back in FY19, which is pre-COVID. So two-wheeler industry volumes have barely crept back up to just at the pre-COVID level, where you can easily see that most of the, in fact, nearly all other industry parameters for other industries, we are easily 30 to 50 or 60% higher than the pre-COVID numbers, where two-wheelers are just at the pre-COVID levels. So clearly there is a lot to catch up there. We believe that a strong double-digit growth for the industry is very, very likely this year, next year, and maybe the year after as well, because there's a long wait to catch up. So two-wheeler clearly looks like the best segment to own within autos. In fact, I would say not just autos, within the overall market, in my view. The tractors, seem to be, the second, where we're seeing some signs of recovery. So those are the two sub-segments of autos which we like.
Mahesh, but it absolutely amazes me that when urban economy was doing well, rural economy was not doing well. Now we are seeing signs of slowdown in urban economy, rural economy is doing well. When cars are selling, two-wheelers are not selling. When two-wheelers are selling, cars are not selling. It's quite contra, isn't it?
Yeah, I think we go through cycles, right? So there are cycles on the urban side, there are cycles on the rural side, there are cycles on the consumption side versus the investment side, and so on. So by and large, our core thesis is that as far as the long-term cycles go, and these are 8-10 year cycles. So our core thesis is still around the positive trend on the investment cycle, which is basically why from a long-term perspective, we still like the real estate, the infra, the manufacturing, etc. But some of the stocks, have run up quite a lot. So maybe one needs to be a bit cautious here.
All right, then let's get to some more news and updates coming in. Then after Brunei, PM Modi is all set to visit Singapore today at the invitation of his Singaporean counterpart Lawrence Wong. And he's also visiting the country after nearly 6 years. During the visit, he will call on the President of Singapore and also meet with representatives from the country's vibrant business community as well. Moving on then, the BJP is expected to release the first list of candidates for at least 50 seats today in the run-up to the upcoming Haryana Assembly elections. Remember, polls will be held in Haryana on October 5th and the counting of votes will take place on October 8th as well. Moving on then, veteran Indian tennis star Rohan Bopanna and his Indonesian partner Aldila Sutrajadi has also entered the semi-finals of the US Open 2024 mixed doubles with a hard-fought win over Australia. Now Bopanna as well as Sutrajadi will play American pair in the semi-finals.
And India para-athletes have scripted history in Paris by winning 20 medals, including 3 gold, 7 silver and 10 bronze. With this medal tally, Indian contingent have surpassed their highest medal tally of 19 at the Tokyo edition of Paralympics 3 years ago. And Manipur continues to be on the edge as another fresh incident of firing has been reported on the outskirts of Churachandpur and Bishnupur districts of the state. Meanwhile, central teams are in Manipur to probe the drone attack on civilians.
Alright, with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Cheryl D'Souza, as well as the entire team that put this show together. Thank you so much for tuning in. But you don't go anywhere because the market will take all of the action forward.